This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on May the 1st, 2015. Our time is 8:52 Mountain. Our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. We also have streaming audio. If you ever miss a radio show, they are streaming live on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio in iTunes. You'll find us. You can subscribe to the podcast. We can go on any portable device you have. We go anywhere you do, and our show is portable. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 1.21 carat cushion cut fancy green ring. You can see a picture of it in our free weekly newsletter you can get from Harold as well. You can see it online. Featured diamond of the week, rarecoloreddiamonds.com. We'll talk more about diamonds throughout the show. In the news this week, U.S. home ownership rates dropped to a 29-year low. People are renting. The average rent hits a record high. In the United States, U.S. gross domestic product, GDP, the first quarter, the number came out, it was brutal, 0.2% to start 2015, and they're already couching the second quarter. Interesting note, over 4 million new Chinese trading accounts for the stock market opened last week. You can see that story and chart in our free weekly newsletter. Bill Ackman, who is a hedge fund manager, says the $1.2 trillion student debt problem in the United States could trigger the next financial market crash. Also, they're still negotiating with Greece, and a Grexit could cause a Greek recession unprecedented in magnitude and a 50% haircut on their currency. Another story that came out this week, negative interest rates. They're putting on course for one of the biggest mass defaults in history in bonds. More than $2 trillion worth of Eurozone government bonds trade on negative interest rates. It's a bubble bound to break. Read that story in our newsletter. Also in Puerto Rico, officials warn the government it's going to shut down. They've run out of money. We saw social unrest in the United States, in Baltimore and in New York City. Also in Nepal, the earthquake, in Chile, the volcano. It was a crazy week. On the hard asset side of things, there was a rare Honus Wagner baseball card that sold for $1.32 million. Harold, it's a tumultuous time in the financial markets, and we still advocate diamonds, gold, and silver. It will get us through the tough times that we live in, economically, geopolitically, and at the same time, you know, we don't know the exact date when another financial crisis could hit, but when you hear about negative interest rates putting on course for the biggest mass default in history in the bond market, it's something that everyone should be very aware of and frightened of, and have an allocation of hard assets, diamonds, gold, and silver, in their portfolio for insurance purposes.
You're 100% right, Randy, and never more important than it is right now. I was out for dinner last night with a very close friend of mine. He's a Swiss banker, very, very intelligent, very smart man, very, very successful. He just rented his condo out for $28,000 a month in Miami. He's such a successful person, and he's telling me that a lot of his biggest clients are expatriating, moving their assets out of the United States to places like Andorra and places, believe it or not, like Central America to Panama. He's feeling that there's going to be tremendous currency moves. Things in Europe are horrible, and he's a Swiss banker, and he's, believe me, familiar with everything that's happening in the currency and financial markets. And he says so many of his clients are looking to leave the United States. They're liquidating everything at this point, getting out of all paper assets and starting to set themselves up and start to get their money outside of the United States and other areas in Europe also. So it isn't only the United States, believe it or not, that has these issues. Obviously, Greece and throughout Europe and other parts of the world, we're going to see some tumultuous markets, and it's the time to be very, very conservative. Again, I know this isn't a popular call, but we do anticipate the gold is going to continue to drop. It's down 11.20 on Friday as we're taping the show at 11.73. Then on top of that, it was down over $20 on Thursday. Now, during the week, if you remember last week's show, we thought that the market would fall off. There was heavy support at 1180. The market was below 1180. If we would have had two consecutive closes below 1180 in gold, the next level would have been 1150, then 1125, and 1100. The market rallied earlier in the week, and then Thursday and Friday the markets came back down. So we're down at 1173. I'd like to see this get over already. Again, as long as the U.S. dollar is remaining stronger than other currency markets, the gold market is going to fall. But we do not anticipate that the gold market is going to fall all that further. Again, 1,100 or possibly 1,000 in the gold market would make an amazing entry level, and again, should coincide with our physical gold program that is almost ready. In actual fact, when I was with my friend from Switzerland last night and told him about what we're doing in gold, he said that he had one buyer in China that would buy every ounce of gold that we could possibly produce. Told him that I had most of that taken care of, and again, I wanted to offer it to, my clients in Canada type of thing also. But again, he's saying that China is definitely buying every ounce of gold that they can buy because eventually the yuan will be the reserve currency, not the U.S. dollar. So, again, I expect some fireworks coming up, not just at this particular point, but as we move further into slower times. Another thing is that we highly doubt, even though the U.S. government is saying that they're going to raise interest rates, I highly doubt that that is going to happen. It could turn out to be a disaster, and we've talked about not only it affecting the stock market and the real estate market, but mostly the derivatives market, which is in the quadrillions of dollars that could bring the financial markets reeling down to the ground. So, again, there's a lot of situations out there right now that are very, very concerning, very volatile markets, and people with the smart money are not putting it in paper assets at this point. I'm very happy to be in the markets that we're in right now. Physical gold, physical silver, physical diamonds, and cash is where we want to be at this particular point. Just look at the people in Greece. Exiting the euro and going back into their currency means that they're going to lose 50% of their net worth. One decision by the government, you lose 50% of your net worth, just like a couple months ago in Switzerland when we saw a similar situation where the euro plummeted and the Swiss franc went up 30% basically in 1 hour. That actually turned out to be a disaster for Switzerland, by the way, and watch manufacturers and people doing business there. So, again, the currency markets are very dangerous right now. I've traded currencies for 35 years, and I've really never seen a situation like this. The other thing that you really have to watch when you are trading currencies is the fact that these banks are manipulating them. Some banks have paid billions of dollars in fines because they've manipulated the currency markets. So you really have to understand what you're looking at in the currencies if you're going to trade them. I'm not recommending that you do that. To leverage anything at this particular point is a foolish thing to do. Leverage can work for you and leverage can work against you. And the fact is that when the markets are going your way and you're heavily leveraged in the right direction, life is sweet. But when the markets are going against you, and we've all seen that happen, and you're heavily leveraged, that's where you can lose more money than you actually put into the marketplace, and it's a very, very dangerous situation to be in. The reason that we are not in paper assets at all at this point is primarily because the fact that the markets are manipulated, and again, we could wake up any morning and find, because of the derivatives market, that these markets are down thousands and thousands of points. So again, it's a time to be very cautious and to consider holding some of your assets in safe assets that, again, are not tied into the financial markets to where they're traded on exchanges. That's why you want to own physical diamonds, and again, to own physical gold and silver within the next 6 months could turn out to be a phenomenal parlay for my clients. So as we're taping the show today, gold is down 11.20 at 11.73. 2 consecutive closes below 11.80 will put us probably down next week to around the 11.50 level. Again, because we're not actively trading gold, we're buying and holding it. I don't care that the market sells off. Let it get it out of its system at this point, and let's see this market get close to its bottom, and then we want to buy aggressively physical gold. You don't want to leverage it, you don't want to finance it, you don't want to do anything like that. You want to own it outright, and we will give you an opportunity to not only buy gold, but also, if you want, store it outside of Canada and the United States and show you how to do that. So, again, we're getting ready and all geared up for that situation. That should be happening within the next few months. The silver market is down 12 cents at 16.08. Again, there's heavy support in silver at around the $15 level and then at $12. And again, $12 would seem to me, if the market gets flushed out, that's where I see silver going to. If that's a problem and you're leveraged or financed and that's going to give you a margin call, you better prepare for that, because that is something that could happen within the foreseeable near future. Platinum's down $11 at 11.36, still below the price of gold. Palladium's holding in there at 7.78. We've seen the oil market go up recently to around the $60 level from a low of around $36, but believe me, the move in crude oil to the downside is not over. One of the reasons that the Canadian dollar has come back strong over the past few weeks is because oil has come back from $35 up to $59 that we saw during the course of the week. As we're taping the show today, the crude oil market's down 72 cents, but I still do believe that Saudi Arabia is not through dishing out the pain that these countries are going to see in the crude oil market. And again, during the summertime when the refineries are shut down and everything, I just don't see oil prices going higher unless there's some type of hurricane or something this summer. Other than that, crude oil could definitely go back to around the $35 to $40 level, which should push the Canadian dollar back down to around the 25 to 30% lower than the U.S. dollar at this particular point. However, we have seen about a 9-cent difference in the Canadian-U.S. dollar spread due to the fact that oil has gone from $35 up to around $60. So again, you really have to know what to look at if you have any intention of trading in these markets. And again, if you're not an avid trader in futures and options, I would very strongly suggest that you don't start to do it at this point. However, if you are interested in trading in futures and options and you want to learn more about the risks and the rewards and how to do it, I will definitely sit down with you, as I have with many, many clients, and explain the trials and tribulations of trading in these markets. Again, if that is something that you want to do, I'll show you a less risky way to do it. It's not a transaction that I'll handle myself because I don't trade the markets for clients any longer. I have done that for over 35 years and quite successfully. Now I'm much more into the more safe and alternative assets like physical diamonds and physical gold. I definitely believe that that's the way to go. It's safe, and it can still give you an opportunity to make an awful lot of money where you're gambling if you're trading stocks or commodities or anything that's leveraged, and it's something that I highly recommend that you don't do. At this particular point, we anticipate that the U.S. dollar will continue to strengthen over the short term, which will put down the price of gold. That's why we're saying that gold should go to around 1,100, possibly a little lower. Again, that will also affect silver, but over the longer term, we anticipate that not only will gold take out the high of 1920 that we saw back in 2011, but to see $3,000, $4,000, $5,000 gold is a very real possibility, and we should get geared up for that to happen. Again, we will bring to you physical gold within the very near future. We're almost finished with our situation with the U.S. government. So, again, Randy, there's a lot of risk in the markets. Get the newsletter this week. It's loaded with very strong information that you need to know if you're going to move forward and make an intelligent business decision based on facts, not fiction.
Our featured diamond of the week from rarecoloreddiamonds.com, a 1.21 carat cushion cut fancy green ring. Go to rarecoloreddiamonds.com right now. Click on the link Featured Diamond of the Week. You can see it in our free weekly newsletter, and you will see a stunning investment diamond ring, a must-have for your portfolio. Obviously, it's wealth, and it's something that you can wear anywhere you want. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, or call 1-800-432-1022. 1-800-432-1022. In our free weekly newsletter, which you can receive from Harold when you connect with him, interesting story. John Malden, highly respected economist, he says, the next great shock to the world will be, I really believe that the Fed is going to raise rates later this year. They should have raised rates 3 years ago. They have distorted the economy and created all sorts of problems. Normally in this cycle, with the growth that we have, interest rates would have been in the 4% range. They have really, really messed up here. They've created all sorts of malinvestments. We have had 6 years of zero interest rates. To think that doesn't distort economics and businesses and how people function, of course it does. People used to save money and put it in the bank in safety deposit boxes or in CDs and live off of it. They can't do that now. We've got pension funds and insurance companies that are literally incapable. It's mathematically impossible for them to make their numbers with the mandates they are regulated to have in terms of how much bonds they're supposed to have and equities. Going forward, they're going to be lucky to make 3 or 4% compounded, but their targets are 8%. And what people don't understand about pensions is the bulk of the money are projected to have in 30 years. When they say they are fully funded today, that means they are expecting a compound return of 7 to 8%. And if they don't get that return of 7 to 8%, that means they are not just somewhat underfunded, say 10 to 20%, they are radically underfunded, 70 or 80%. Well, where are you going to make that up? What's basically what some believe could be $1 trillion. When you have $1 trillion that people are relying on and they don't have that money, where are you going to cut from? This is going to be a crisis that's going to show up in the next decade. Where are they going to get the money? What's going to shock people is insurance companies and big annuity companies that are guaranteeing so much of those funds. It's going to be a true crisis. And what most people don't realize is that the insurance industry is a multiple the size of the banks. It's far bigger, far vaster, and far more important. So this is what the Fed has done, is they have made it impossible for these guys to make their numbers. We are going to have pension and insurance and all sorts of reforms. That's the next crisis. And Harold, I don't necessarily disagree with what John Malden is saying. You have interest rates basically at negative in a lot of countries or zero, and yet these pension funds have to make a certain amount of money. We had it on last week's show where in Switzerland they were saying that their pension scheme was going to be bankrupt in 10 years. And if you have maybe gotten an annuity or some sort of program through an insurance company and they've promised you money and they can't generate that rate of return, we're setting ourselves up for a potential financial crisis. And that's why we advocate, still believe, you need to have hard assets, diamonds, gold, and silver. Harold, it's a very scary time when you take a look at the mathematics and take a look at the numbers behind what has been promised.
Better believe it, Randy, again, and at times very, very confusing. So you would think that the people that are experts at this and doing this would know what they're doing. But the fact is that we're almost in uncharted territory. Situations that we're in right now have never really happened before. Quantitative easing is not something that they've done before. So, again, negative interest rates is such a confusing thing for most people. Who would ever think that the banks could actually charge you for keeping your money in the bank? You know, the fact is that if people are taking their money out of the banks for that particular reason, how do the banks stay in business? They won't have any money to loan out, and that's where their income comes from, basically, is loaning out money, which they have not been doing successfully for the last few years. So, again, it's a very trying time. Again, as smaller investors, and a lot of our clients, are not billionaires. They're not millionaires. They're just hardworking, everyday people that just don't want to lose everything. And the fact is that that's why we do the show, because at least our clients and listeners to the show have enough information to make a decision whether they want to go the route of speculation or if they want to go our route, which is more conservative. We don't take unnecessary risks at this particular point, because if you're in your 50s, 60s, or 70s, you cannot afford to get into trouble financially again. You know, in the United States, as Randy read earlier, the amount of home ownership is the lowest that it's ever been at. So the fact is that where they're still building homes in the United States, it's for the rental market. People cannot afford to own homes. The fact is you got to put up 30%. You got to have a stellar credit rating in order to get a mortgage, and that's just not possible anymore. The middle class got wiped out here. The middle class is in so much trouble here in the United States. They've never seen a situation as bad as this since the Great Depression back in the 30s. So, again, it's a very trying time. It's not the time to speculate. It's a time to be very conservative, not to leverage, not to finance, not to do anything like that. Just own your assets and hold them very close to you. You may need them sooner than you think.
Featured Diamond of the Week from rarecoloreddiamonds.com is a 1.21 carat cushion cut fancy green ring. We really believe in the economic times that we live in, you need an insurance policy in your portfolio. That includes alternative assets, diamonds, gold, and silver. It's the insurance policy that if somebody like John Malden is right, you will be very happy that you have. An interesting story in our free weekly newsletter, David Stockman saying there are no markets, just a raging casino. Mania in financial markets has raged so far out of control as to place them outside the realm of rationality, says the former White House budget director David Stockman. There are no markets left in any meaningful sense of the word, just a raging casino infected with the madness of the crowds and central bank Pied Pipers who mesmerize them. He writes on his blog, the madness is illustrated in the months-long rise of Chinese stocks and the rebound of McDonald's shares. As for China, the index has soared there 121% in the last year. And what has transpired in the land of red capitalism during the parabolic move? Why, everything has gone virtually straight south because the most fantastic credit bubble in the history of the world is beginning to burst. When it comes to McDonald's, the stock has jumped nearly 4% since Tuesday despite a weak earnings report. And McDonald's, obviously, their business model, we know they're shutting down 700 outlets, is obviously visibly failing, according to Stockman. Bottom line, this is a mania, an outbreak of herd irrationality that would make Graham and Dodd and any other true value analyst as welcome as a skunk at a garden party. But, yes, David Stockman, who is involved in the Reagan administration as the budget director, coming out and saying there are no markets, just raging casinos. And that's why, once again, we advocate investing in hard assets, diamonds, gold, and silver. Speak with Harold about our featured diamond of the week, a 1.21 carat cushion-cut fancy green diamond. Take a look at it at rarecoloreddiamonds.com, rarecoloreddiamonds.com. You can speak with Harold personally and privately at 1-800-432-1022, 1-800-432-1022. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on May the 1st, 2015. Our time right now is 9:16 Mountain. Radio show runs on 6:30 CHED in Edmonton, Sunday at 3. If you ever miss a radio show, Harold has the shows streaming archived free of charge. Two websites, HESradio.com and rarecoloreddiamonds.com. We also have a podcast. If you have a portable device, iPhone, iPad, iPod, any portable device, download iTunes. Type in The World Financial Report on radio. You'll find our podcast. You can subscribe to it. The shows will come in automatically every week. We are there for you, and we can be listened to anywhere you go. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 1.21 carat cushion cut fancy green ring. Just a stunning ring. One of the big stories from last week, and we have an interesting article, the priciest diamonds in the world, 4 stones that shattered auction records. Pink proves far more expensive than white at auction. You'll see that in the article. But last week, Sotheby's sold a 100.2 carat emerald cut white diamond for $22.1 million during its much anticipated magnificent jewel sale. It's been an amazing time in the diamond market, Harold, and this ring that we have featured this week, the 1.21 carat cushion cut fancy green ring, is just an outstanding way to get started investing in diamonds.
You're 100% right, Randy. This is a ring that most people in their life will never, ever get a chance to see anything like this. Green diamonds are so unbelievably rare, and to have a diamond like this set into a ring setting, it's just an absolute museum quality piece. The other thing is that the little pink millets around it are almost impossible to get. In actual fact, a lot of the jewelry business where the high-end jewelers that make these type of magnificent pieces has slowed down tremendously because nobody can get any millies. We know that last year they went from $800 a carat to $10,000 a carat, and now you can't even get them. That's how difficult it is to get those small, little, tiny pink diamonds. You can imagine how much pink diamonds are going to go up the next 5 years as the mine gets closer to closing. So you're right. That green diamond is so unbelievably rare, and in the ring setting, it's definitely a museum quality piece that would shock anybody who wears it. It is that beautiful. On top of that, most people never knew that diamonds came in green, especially one as beautiful as that one, and it's actually uranium that turns a diamond green. Very seldom will you ever see a green diamond. In fact, they are so rare that when they come out of the ground as a rough diamond, they actually have a black film over them. And for years, the cutters, the diamond cutters, would think that they were black diamonds and sell them for $200 or $300 a carat, when green diamonds sell for $200,000 to $300,000 a carat or more. So what happens when a green diamond comes out of the ground as a rough diamond? The owner of that rough diamond will actually sell it to a cutter. But before it could actually be cut and polished, it's got to be sent to the Gemological Institute of America in New York, known as GIA, and they will start a grading process on that particular diamond that is different than any other type of diamond. Because with a green diamond, they've got to be able to see it as a rough diamond to determine that it's a natural diamond. And then once the black film is actually peeled off and it goes through the cutting process, it has to go back to GIA 2 or 3 times before they'll actually grade it as a true natural diamond. Otherwise, if you don't go through that process, GIA will grade it as undeterminable, meaning that they're not sure whether it's been heat treated or anything like that. So green diamonds are the only diamonds in the world that go through that process with GIA. I own probably 5 or 6 green diamonds in my collection, and they are beyond belief. Again, to own a green diamond is something that is truly rare, and over time will make you a fortune of money as far as an investment goes. That is a diamond that, again, we brought to you as a true gift. Very seldom does a green diamond ever come on the market for sale. So, again, it's an interesting process to get it graded, but to own an actual green diamond is one of the finest diamonds you could ever own. That particular ring, obviously with the pink diamonds around it, just makes it an absolute magnificent piece that any woman would want to own and proudly wear. It is that beautiful. Again, just to reiterate, those little pink diamonds that go around the actual diamond ring is impossible to get at this particular point. So this is a diamond ring that has not only got a very rare green diamond, a 1.21 cushion cut, but then it's surrounded by these little pink millies that are impossible to get now. Then it's framed in white diamonds, and the actual band is all decked out in white diamonds also. It's a piece that defies description, one of my favorite pieces of all time, and some lucky owner will own this diamond and not only have an opportunity to wear it and enjoy it, but to sell it eventually for a fortune, for much, much more than what you'll pay for it at this particular point. The diamond business is on fire. With what's happening with the banks, with what's happening with the currency markets, it's the only market that I know of that is safe from currencies. Because, again, we're seeing huge changes in currencies. And, again, you know, I'm Canadian. Most of my clients are Canadian. And we've seen a huge drop in the Canadian dollar that really affected our business for a short period, for a period of time. Because now you'll understand as Canadians that when you look at your dollar, and the dollar has fallen by, let's say, 25%. First of all, the good news is that if you bought diamonds within the last year from us, where diamonds are priced in U.S. dollars, you made 25% on the price of your diamond just by the currency going up. So that's what I mean when I say diamonds are a phenomenal hedge against the currency markets depreciating. But on the other hand, our Canadian clients are having problems purchasing diamonds based in U.S. dollars right now because the Canadian dollar has decreased by 25% or the U.S. dollar has increased by 25%. It's the exact same thing. But again, now you understand how the weakness in a currency can affect you moving forward. If you stay within Canada or you're not really going to know a major difference between, because the U.S. dollar has strengthened, the Canadian dollar has fallen. It's only once you do business outside of Canada, you go on vacation in Europe, you go to England, you're still going to cost you 40 or 50% more to convert Canadian dollars to British pounds. Even with the euro at a 111 at this point, it still would cost a Canadian going to Europe and actually converting their Canadian dollars to euros about 30% more or 40% more than what they're paying at than what their Canadian dollar is worth. So that's how the currency markets can be affected by diamonds, and diamonds on the other hand are obviously affected by what happens in the currency market. So on one hand, our Canadian clients that bought diamonds last year and the year before are up at least 25% just on the currency alone. As we move forward, we feel that the currency markets, again, with what's happening in Greece and Europe and all over the world, diamonds are one of the safest assets you could own and could end up making you a fortune of money, depends on where we sell that diamond for you. We are now starting to make inroads as far as selling our diamonds in different parts of the world where their currency markets are stronger. Mostly England. We're getting a lot of response from England, and we're starting to advertise a lot in England in order to get English clients, British clients, that will realize the value in buying our diamonds and converting British pounds to American or Canadian dollars. So, again, I just think that what's happening in the diamond market is so important, especially with what's happening in currencies at this point. And then we have the unique opportunity that will never, ever happen again, where the Argyle mine that produces 95% of all the pink diamonds in the world is going to close in less than 5 years. If you own an Argyle pink diamond, you're going to make an awful lot of money, 2, 3, 4, 5 times your money, depending on what color diamond you own and how saturated that pink diamond is. Again, the best illustration I can give you right now is that those little tiny pink diamonds, those little tiny millies, have not only gone from $800 a carat to $10,000 a carat. Now you can't even get them for any price. So that's what's happening in the pink diamond market. If you're sitting in stocks, if you're sitting in investments that are not making you money, put some money into a pink diamond. You can get involved in pink diamonds starting in about the $30,000 to $40,000 range and up from there. You could easily double or triple your money in the next 5 years just because the mine is going to close down. And the fact is, that's not capable in any other marketplace without taking some type of risk. The fact is that the diamond market is portable private wealth. And what I mentioned to you earlier is extremely important. My friend, who's a Swiss banker, is saying that many of his clients are leaving the United States, giving up their passport, liquidating their assets, and moving to different parts of the world. Diamonds are that type of asset that you can take with you, that don't lose their value, and the government does not know that you own them. That's extremely important. Most people don't trust the government at this point, especially in the United States and especially in parts of Europe. So, again, when you're looking at assets to own in these type of trying times, there's no doubt that diamonds give you the opportunity to be very flexible. It gives you an opportunity to own an asset that is not in the mainstream. It's an alternative asset. It's not traded on exchanges, so you don't get those volatile up and down moves. These are assets that do well no matter what the economies are doing. They do well during good times. They do tremendously well during bad times. And again, we're heading into some of the worst times that we've ever seen. So my recommendations are this. First of all, the featured diamond today or this weekend, you'll never get a chance to buy a diamond like that at the prices that we offer these diamonds for, because these are investments. We want our clients to make money with them, and we want to make money with you when you sell them. We own 8 Siegel Fine Auctions, which is one of the only secondary markets available in the world today to resell diamonds. We built it for our clients. Now, as we're building that business, we're trying to attract wealthy clients from all over the world, and we have programs that are helping us get to those levels. Fortunately, at this point, very few people are selling their diamonds. They understand the value of them. They understand the benefit of owning an asset like a diamond in a time when currencies are going crazy. So, again, we have time to build this auction business, and we're spending a lot of time doing that, attracting high net worth clients in different parts of the world that will attend our auction. So, again, we're extremely excited to move forward, going forward next year, and the rest of this year as to what's happening in the diamond market. But the closer we get to the Argyle mine closing down, the more and more of these pink diamonds will go up in value. And as I mentioned before, we will never have another opportunity to visit this situation again, because there is no mine in existence that does what the Argyle mine does. The other situation is yellow flawless diamonds. Yellow flawless diamonds increase by about 15% a year. You can get involved in and around the $20,000 level. They're great assets to own. They're beautiful diamonds. They're flawless, so they're of very high quality. And again, there's not a lot of them around. What we anticipate doing with our supply of this year's diamonds, I anticipate making a yellow flawless diamond necklace of about 100 carats. That will eat up the majority of yellow diamonds that came out of the mines that were cut that were flawless this year. So basically, it's a very, very tiny market, and when these diamonds tend to disappear, when you buy a 100-carat yellow flawless diamond necklace, you're basically taking a whole year's supply of yellow flawlesses off the market. We also have enough diamonds to make a matching bracelet, earrings, and ring, and that's something that we will eventually auction off, and I think it will sell tremendously because there will be very, very few yellow flawless diamonds around. You also want to look at blue diamonds. Blue diamonds, you need boron in the ground for a diamond to turn blue. But last week, there was an auction, and a gray diamond sold for way more, and I mean way more than what the experts thought that it would sell for. We've been offering lately some very, very rare gray-blue diamonds from the Argyle mine. We anticipate that these diamonds will increase in price possibly 500% or more over the next 5 years when the mine closes down. So there's tremendous opportunities in the rare diamond market. We are leaders in that industry. We put a lot of money back into that marketplace. And again, we believe that they are the safest and most profitable assets that you could own at this particular point.
Featured Diamond of the Week from rarecoloreddiamonds.com, a 1.21 carat cushion cut fancy green ring. See it online, rarecoloreddiamonds.com. Featured Diamond of the Week. You can see a picture of this diamond in our free weekly newsletter. Just a stunning, stunning ring. It's auction season, and coming up, an 8-carat historic pink diamond, 25-carat Cartier ruby, and 5 tiaras are going on auction at Sotheby's, Geneva. Sotheby's auction of magnificent jewels and noble jewels in Geneva has lots of everything, including a historic jewel with possible ties to Napoleon, statement-colored diamonds and gems, important signature jewels led by 4 Cartier pieces, and just for fun, 5 bejeweled tiaras, with 3 of them from a historical renowned private collection. Now, if that's not enough, there is at least 1 statement natural pearl necklace. So coming up on May the 12th, and we will have the auction results for you, it's at the Hotel Beau Rivage, they're going to be selling the 8.72 carat historic pink, described by the auction house as an extremely rare and highly important, fancy, vivid pink diamond. According to the GIA, it's believed to have been owned by Princess Mathilde. She was the niece of Napoleon Bonaparte. The stone is also distinguished by its classic non-modified cushion cut, unusual in pink diamonds. Sotheby's said pre-sale estimate on that diamond, 14 to 18 million. And if you missed it, congratulations to rarecoloreddiamonds.com and Diamante Atelier. They sold, and what a great investment piece for this investor, they sold a necklace and a ring valued at $890,000. And Harold, it's great to hear people who are connecting with us through rarecoloreddiamonds.com, through the radio show, making investments in diamonds. And we just get so excited when that happens because they share that long-term vision that we do. Hard assets, the place to be in the long term based on what's happening in the financial markets and geopolitically today.
You bet, Randy. Again, this is something that we brought. This is our 8th anniversary now, actually, and we changed the diamond business over the last 8 years, but nothing compared to what we have in store for it moving forward. Again, the diamond business is an old business. It's made up primarily of the Hasidic Jewish people that really run the diamond business. They have for hundreds of years. So basically, they're not marketing people. They've done the same business over and over and over again for all the time that they've been in business from generation to generation. And I guess as the old saying goes, if it's not broken, don't fix it. But again, they never capitalize on the investment aspect of the diamond business. Personally, the people that I deal with in the diamond business are amongst the wealthiest people in the world. They're very quiet. You never know that they have the type of money that they do, but they do. They very seldom have to deal with banks. They have most of their money in extremely rare diamonds, and that's the way the families have operated for centuries now. So the fact is that when we looked at the diamond market, and again, my major background was commodities and marketing, I looked at it in a totally different way. I saw it as investments because I did studies and found out how much certain diamonds actually did go up in value before I got into this. But then on top of that, what it was missing was a secondary market, a way to resell them, and that's one of the things that I really believe that we brought to the diamond market. But all in all, with the way that the financial world is unraveling at this particular point, it's probably the smartest move that we ever made. They're safe. They're conservative. You can still make an awful lot of money with them. It's different than trading in other assets like commodities or stocks or those type of things. It's an asset that we call an alternative asset to stocks, real estate, and bonds, but it's very safe. And again, a lot of people have made an awful lot of money in the diamond business.
Well, we mentioned that rarecoloreddiamonds.com and Diamante Atelier had that amazing investment. They have a collection catalog, and if you would like to get the 2015 collection catalog, I have gone through this catalog. To me, some of the most stunning, unique diamond pieces, diamond jewelry pieces ever seen on the planet, museum-type pieces. We will be happy to send that catalog to you, and when you take a look at some of the different wearable investment ideas. As Harold and I always like to joke, you walk into a party, if you have a bond certificate or a stock certificate on your finger, people aren't going to really say too much. But if you walk in with a stunning 1.21 carat cushion cut fancy diamond ring, that's going to be a different story. And I have seen it, as Harold does on a daily basis when he's out with his wife with some of the diamond jewelry she wears at different parties at times. You walk in a room and the attention is simply stunning. Invest in diamonds through rarecoloreddiamonds.com. Featured diamond of the week is a 1.21 carat cushion cut fancy green ring. And beyond the catalog we want to send you, Harold has become, since starting rarecoloreddiamonds.com, has become a worldwide authority on investment diamonds and the auction business that he has, hsfineauctions.com. He's been on Bloomberg. He's been on Fox Business News. He's been on the Jerry Bovino Show. If you would like to take a look at those interviews, we'll be happy to send those to you as well. If you really want to get to know the man, Harold Siegel, watch the Jerry Bovino Show interview. But we do have those interviews from Bloomberg Television and Fox Business. But, Harold, I really encourage people to take a look at the Diamante Atelier collection catalog because, here I am, a guy. I'm not going to be wearing women's jewelry, but, even I was just blown away, stunned at not only the beauty, but the investment potential of some of the pieces that were in that catalog. Absolutely amazing museum quality investment ideas in one catalog that are really a must-see.
Thank you very much. I agree with you 100%. The catalog is amazing. We have over 3,000 pieces of jewelry, and most of them are museum quality pieces. We had some clients in from Mexico the other day that just absolutely flipped over what we have. We have, some necklaces that belong to Elizabeth Taylor. We have other necklaces that are hundreds of carats of yellow diamonds. Again, we have a private showroom in West Palm Beach that actually some of our Canadian clients came down this year and were fortunate enough to be able to come in and see. It's just an amazing thing. So we're building a beautiful business in the sense that we want our clients to be able to own assets that hold their value and actually increase in value, but we want them to be able to enjoy it also. So we have many divisions to our company. We have Rare Colored Diamonds, which is obviously our investment quality diamond section. We have H. Siegel Fine Auctions, which is the reselling aspect of our business. We own Diamante Atelier, which is our jewelry division, and we also own Natural Diamonds Investment Corporation, which deals with our rough diamond business that pays our clients a whopping 24% a year return in U.S. dollars. And that is still available to our Canadian clients if they need that type of income. It gives you an income every single month of 2% of whatever your investment is. So if you invested $100,000 with us in U.S. dollars, you will get paid $2,000 a month for 24 months, or you'll make $48,000 return U.S. on your $100,000 investment in 2 years. Many of my clients are retired, so this was a godsend to them. And again, this is a business that we've increased our business using our clients' funds. I've always done that with my clients. Many of my clients have been partners in diamonds and different businesses that I've started. There's times that we'll buy a piece of a diamond, and our clients will come in as partners with us. So when these opportunities do come around, we do like to offer it to our clients, and again, mostly in appreciation for all the years that we've done business together. So if any of those are of interest to you, buying investment quality diamonds through Rare Colored Diamonds, selling them through H. Siegel Fine Auctions, buying our magnificent jewelry through Diamante Atelier, and our private investment, which is to do with our rough diamond business, where we produce rough diamonds from our mines and we sell them to cutters and polishers. If you want to get involved in that, that pays 24% a year.
5 compelling reasons to invest in diamonds. Privacy. And that's what we're all looking for today, privacy. Portability. Obviously, real estate in your pocket. Estate planning, something that can be passed down from generation to generation. Great price stability and good long-term growth. We also have a report from Bain & Company about diamonds in the Far East, in Asia, in India and China, and how they're becoming so popular. And there are no new mines being found, and over time the prices will continue to rise in diamonds as those in the Far East start adding to their investment portfolios and their jewelry collections by adding not just gold and silver, but diamonds as well. Harold, thank you very much for another outstanding show and your knowledge again this week.
My pleasure, Andy. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold about our featured diamond of the week. It's a 1.21 carat cushion cut fancy green ring. See it at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Click on Featured Diamond of the Week. Get our free weekly newsletter. You can see a picture of the diamond in our newsletter as well. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.